Hello everyone, welcome back to Upside Down Data. Today I want to talk about momentum with Bitcoin and how it can help us better understand market sentiment. If you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter, where we put out regular updates about our risk indicators and more. So I think that momentum is a very interesting thing to watch with Bitcoin for a couple of reasons. Momentum is an interesting concept in markets. It's this idea that trends that have been building kind of self-perpetuate themselves, that they can kind of self-reinforce themselves up to some critical point, at which point the trend oftentimes changes. So if we look at the momentum bias indicator for Bitcoin, this is a indicator that we have here on the channel that's trying to get at whether or not the momentum in the market is biased towards the upside, green, or the downside, red. 0 is the average momentum, and then everything else is denoted in standard deviations. This is a z-score. So 1 would be 1 standard deviation above the mean, -1, 1 standard deviation below the mean. And so what you'll see with Bitcoin is that you'll get these kind of big explosions to the upside at tops, this kind of building momentum to such a high feverish degree that it just can't sustain itself. Then you get a big drop back to the downside, big massive swell in momentum that just drives price up, kind of pushes up to some critical mass before it falls down. But you see the same thing on the downside too, right? You'll see capitulations at the very bottom of bear markets tend to stand out relative to the amount of negative momentum bias that might have been present in the market previously. Down here, down in the bear market here, 2015, 2018. And then, this would be a bit of a black swan, but you can see that the March 2020 crash was also quite deep red. And then we even saw that in the summer too. Kind of these capitulation moments tend to be these extreme levels of downside momentum that then move back to the upside shortly after. And the reason why I think this is interesting to think about in terms of market sentiment is it tells us something about what's going on in people's heads potentially to allow momentum to move to such extreme degrees. To the upside, what ends up happening is that so much mania enters the market, so many new buyers are just FOMOing in, that it gets to a point where it becomes completely unsustainable. The prices exceed what is reasonable by such an extreme amount that all that demand kind of swoops in and gets exhausted. People throw all their money in, deploy all their capital, and then at a certain point there's just nothing left to go in, and no one, else is looking to add their demand there, and then it just crashes back through the order book. So there's kind of this euphoria psychology that takes place where people aren't holding back, they're not saving anything else, and the prices get so far extended that no new entrants are really looking at that as being all that that wise. And then of course smart money has been selling the whole way up into strength, and then that ends up tanking the market afterwards. But a similar thing can play out in bear markets as well, where you get these very extreme moves to the downside where suddenly everyone capitulates, everyone decides, all right, I'm going to just sell it all, and you get to a point where everyone who's going to sell has sold. And then really it's just demand at those really low levels, those attractive levels, that steps in. So you can almost think of capitulation and euphoria as being two sides of the same coin, just the opposite behavior that's happening. Euphoria is about people spending all their dry powder into the market, and everyone who is going to put money in has already done so there's no more demand to soak up the selling that starts happening at the top. And then capitulation is the opposite, where the selling ends up getting exhausted, and then demand is all that's really left. But, of course, one of the things that's interesting, why I think it's notable how you'll see momentum bias really kind of bottom out these extreme low levels here, is that before you see those capitulations to the downside, it's this idea that there's still some people who aren't necessarily sure if we're necessarily in a bear market, for example. This is a thing that happens every single time you're entering into a bear market. It's a matter of the bulls, taking a long time to be convinced, and you'll only oftentimes get these huge capitulations when very few people are still bulls, when people think, all right, this is it, we're just going to keep going lower, I'm going to sell out now, thinking that lower prices are to come. And that's, of course, the moments when you find a bottom. And so when you look at the MBI structure across Bitcoin's history, you can really see these different psychological kind of mindsets come in. So coming off of blow-off tops, you'll get these bear markets. So like here, for example, these bear markets where where the bulls keep trying to reclaim the upper hand. There's still people who think that, you know, a rally from here is likely. You know, it happens every single time, happens all the time. You know, or here, for example, the bulls keep thinking that something's going to happen to bring us up, and then ultimately there's capitulation. So there's some uncertainty building into the ultimate drop to the downside. There's this buildup. You see it again here. This kind of buildup of kind of uncertainty where the momentum bias is in the negatives, but the bulls are still putting up a fight, and then there's ultimately the capitulation where everyone gives up, and then that's, of course, when you find the bottom. And so when you see this kind of movement, this is what I've talked before about being a signature of a bear market, is these kind of efforts to regain the upper hand by the bulls that keep just very quickly getting rejected as it pokes up above the mean, right back down, leading into that ultimate capitulation. But then on the flip side, you see a similar story play out moving back to the bullish side, where now everyone's become a bear down here, and now suddenly, because everyone who's going to sell has sold, you know, it's easier for prices to just start moving up. But again, you start seeing that now that the bulls are able to regain some of the upper hand, then there's sell-offs that happen. You know, there are people who still aren't really believing it all that much, and so there might be some people who bought in at the lower levels but are still not full-on bulls thinking you're going to go off to some parabolic rally, and they'll sell off, and you get this kind of equal oscillation around zero. I've noticed this before. And really what this might be signifying kind of in market participants is somewhat of uncertainty, or, you know, very cautious optimism potentially, where, you know, they're willing to hold in these or acquire potentially in these dips, but they're not really willing to hold it for super long, and they sell the pumps. And so you buy the dips, sell the pumps, you know, or people who buy down here, sell here. They're not really necessarily confident that it's going to go exploding up. And it's really only once we've gotten to this point where price has generally been in an uptrend for long enough that people are becoming more confident in the uptrend, that you then build into this kind of pattern where you're spending a heck of a lot more time in the positives, with a lot higher positive momentum being set in, that then suddenly you get back to that mania phase, and then everyone jumps in, and you go in and put off that blow off top, where now suddenly everyone's euphoric, thinking prices are just going to keep going up, and that's, of course, when they stop going up. That's when they capitulate, crash down. And the same general pattern has happened every single time for Bitcoin, where you'll get your big capitulation, some uncertainty, blow off top, going down into a bear market, where, you know, the bulls are trying to put up a fight, capitulate, going back to uncertainty, then blow off top. Bear market, bulls trying to put up a fight, capitulation, going off into a big rally in the case of 2019. Sort of not really a blow off top, but, you know, a rally that was a little bit overextended, you know, going into more bearish standing, more just kind of uncertainty with a capitulation, black swan in the middle, and then off to euphoria. And then what you can see about what we're doing here, and what's really interesting, I think, to maybe reconceptualize what we saw back here in this moment over here, is you could argue that this was kind of a very strong showing by the bulls to try to reclaim the upper hand, like what happened back here, like what happened back here. But ultimately, you know, it didn't end up panning out. And I think here, arguably, you could just say that macro factors intervened to prevent this from moving on to something like this. And now we're very clearly back in this bear market stance, where, again, we went into this big drawdown, a lot of people still bullish at this point, not willing to give in, to say that we're in a bear market, and then we peak our head above zero, and then everyone sells off and we go into this big, massive crash like we've had back here. And so what I think is really just interesting about this chart, or about this indicator, is that you can really see the different phases of the market cycle occurring. And it's very clear, especially through these phases, what kind of market sentiment you're in. And so personally, what I'm seeing right now is very much this sentiment that we had back here, where, you know, back here, where the bulls were trying to put up a fight. They managed to push up to a positive momentum bias, but then the bears just pushed it all down. The bulls got rejected. Now, the question then is this extreme enough of a downside reading to be like these capitulations we've seen in the past that have ultimately marked the very bottom? And you'll note that these capitulations, these market cycle bottoms, tend to be, you know, the lowest level relative to the recent lows that have been put in back in the past. You know, you'll note that the bottom of the 2015 market was the lowest level relative to what had happened before in that bear market. 2018, the lowest level relative to what happened in that past bear market. And so I think, you know, we could speculate about different things from that about where we are right now. So obviously we're not as low as we were back here in the summer. So if we're going to categorize all of this as one bear market, you could argue that we haven't actually put in a lower low yet on this, that this was kind of a big capitulation. You need to see something lower to really say that we've kind of hit that bottom of the bear market, the strongest capitulation point. But if instead you argue that kind of the summer was its own capitulation leading into what could have been another move up, sort of like what we saw back here in 2013, then maybe you're arguing that this is really the beginning of the bear market from the all-time high in November. And if that's the case, we certainly have put in a lower low on this indicator than we did just in this capitulation going into the beginning of the year. So that's one criteria that you could check off for it being a potential bottoming point. But, we've seen this before where you can put in a lower low on the same one and then put in a lower low after that. So it's not necessarily guaranteed that we couldn't go down further from this. But certainly, it's showing that we're showing some of that bear market behavior, right? We're putting in these lower lows, which can happen. And really, it's hard to know if this is the bottom or not. And that's the other thing I wanted to talk about in this video as well, is there's a lot of ink being spilled to talk about what is the bottom. Is this the bottom that we're seeing right now? Can we call the bottom perfectly? A lot of people trying to, time that bottom perfectly. Personally, I see this being a bit of a fool's errand because really no one knows what the heck is going to happen with Bitcoin. A lot of it's going to depend on macro factors completely outside of the crypto markets, beyond any control that anyone in the crypto space has. And so really to be able to say that you can just look at anything internal to an asset and then call the bottom when there's these other extraneous factors pulling it down, I think is probably a bit of a fool's errand. And that's why I'm not going to be calling this the bottom just because we might have, theoretically put in a lower low on this indicator like we have in the past at major capitulation points. Because who knows, something could happen that could cause Bitcoin to capitulate even further. And we could print an even lower low down on this metric, and that could be the market cycle or the bear market bottom, etc. All that can happen. And so the other thing I wanted to talk about then is I think that this is useful to tell us where we are. Are we in a bear market, bull market, all that? In my opinion, it's very clear we're in a bear market right now from the way this is behaving and the way that people seem to be acting, just looking at how momentum has been behaving in the market. But the other thing that you can think about, and this is something that people talk about a lot, is, you don't necessarily have to catch the bottom. You just need to be close. Or the other idea is, or the other thing that you'll see people say is that, professionals tend to be quote unquote late. And what they mean by that is that they're not trying to time the absolute bottom. They're waiting until they have more confidence that the kind of trend in the market has reversed before they then step in. So I want to just talk about one other indicator we have here on the channel, the market direction classifier, which is a new indicator that recently just launched on the channel, and it's really supposed to get at more macro trends in crypto assets. So here's what it looks like for Bitcoin. You'll note, for the green is when you're in kind of more of a macro uptrend, or the green is when the indicator is identifying you're in a macro uptrend, and then it'll flip red when it identifies it being the likely beginning of a macro downtrend. Green uptrend, red downtrend, up, down, etc., all the way throughout. And so for me personally, when I'm kind of navigating what we're doing right now again, not financial advice, you should navigate however you see best fit. I'm not looking for the absolute bottom. I frankly don't really care what the absolute bottom is for this bear market. And the reason I say that is that, looking at this indicator, if you were to be trading on this, buying in when it's turning, flips green, selling when it flips red, you never would have caught the absolute bottom using this indicator. But you would have gotten pretty close, right? You would have gotten quite close here back at the bottom of 18, pulling up for this whole run into 2019. You would have caught the main meat of the move up into 2020, 2021. You would have caught a lot of this upside over here, certainly a lot of the upside back here. And when you do back testing, when I introduced this indicator on a separate video, I showed some back tests. You crush a buy and hold strategy. You beat the market very well just trading based on this and not worrying about catching those absolute bottoms. Because again, in my opinion, it's more luck than skill in any way to catch those absolute bottoms, because it's really hard to know if you're actually at the bottom. But if you're just using something like this, you can catch the main meat of those big macro trends, which I think is ultimately what most traders are trying to do. You're trying to catch the most amount of upside and then get out before you have to start eating that downsides. Ride the green up, get out at the red. Ride the green up, get out at the red, etc. That's what most people are looking for. So for me personally, I'm not going to be getting too excited until I see indicators like the MDC flip bullish. And so right now, one of the nice things about this model is that you can actually probe it to ask it what price level it's looking at as being a critical level before it starts getting bullish. And you'll see that it's way above where we're trading right now, you know, $10,000 above where we're trading right now. And basically, it's just saying that unless Bitcoin can start showing some serious strength in the short term, it's not seeing any reason to think that this downtrend is going to break anytime soon, or that we're not, at the very least, just going to consolidate, you know, maybe like what we did down here. Now, this is a dynamic level. This will change, and so if we fall further, or if we, even if maybe potentially we just keep on consolidating down here, this might fall down closer to the level that we're at. But currently, right now, it's seeing no reason to be getting too excited. And again, it very well could be the case that this is the bottom, and that we might get a reversal to the upside. But really, you know, there's a lot of risk that gets involved if you're trying to time the bottom perfectly. So if you're thinking this is the bottom, you deploy a ton of your capital, and then you dump another 50% on the asset, then that's just a lot of dry powder that you've just now 50% down on that you don't have to buy in at an even lower price. Whereas if you're using an indicator like this, the benefit is that you wouldn't have bought in yet here because it's still red. Drop another 50%, great, still red. And then you wait for it to flip green somewhere down here, and then you get in, and then it's off to the races potentially, you know, like what we saw back in some of these instances over here. And so that's just kind of one of the things that I think about as well with some of these indicators is, you know, you'll see a lot of people trying to say that they can call a bottom perfectly. I think it's a bit of a fool's errand. And for me personally, I'm going to be looking for those broader trends. Now, that doesn't mean I won't also use indicators like our risk model, the upside downside potential indicator, give me an idea of how aggressively I maybe should be buying in once some of these trend indicators are flipping more bullish, or when I should be starting to scale out as we're going through some of this, you know, trying to catch these tops a little bit more closely. You know, there's certainly things you can do to try to fine tune any of those strategies. But I personally think that as long as the trend is still bearish, you're kind of potentially catching a falling knife by trying to call the bottom and just go all in, hoping that it's the bottom. There's a lot more risk, a lot more gambling that gets put into place in that sort of context. Now, again, not financial advice. That's just one of the things that I'm thinking about with navigating this bear market. All right, if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. Put a lot of updates about our indicators and more over there.